how do you go about making sure that you have your own independent view on an industry or a company before doing more research?
I think part of it is, for me, it's just like, for example, in this automotive dealer sort of space, clearly the market doesn't believe the numbers are sustainable just from the valuation. But when you look at the underlying research and the underlying sort of assumptions that go behind to get you to that place, that's part of, I think, what you need to take a look at too is, okay, if this company is going to double earnings in the next 5 years, what assumptions do I need to make to get there? And then are those inputs to those assumptions achievable? Have they been achievable in the past? And looking at those types of things and then tracking those going forward, I think is important.
Yeah, and I think for me, the foundation of my research is always the regulatory filings, and making sure you understand and have read the last couple 10-Ks. You're following along in the Qs. I think the proxy is really important to look at. There's times where there's some hidden information in there that has to do with incentives, related to senior management. So I think that's really the foundation first. And once you are very well versed in that, then you can go on to a different type.
What's an idea, Steve? You've been
so I won't disclose the name, but there's an idea recently that came across through a regulatory filing through like the RSS feed. That basically it's a kind of a smallish company, but it talked about putting itself up for sale. And after I read through that filing, it's like, there's something about that company that sounds familiar. So I set it aside for later. And then once I kind of went through the filings and then looked at some other research, it turns out I had a few other colleagues, a few other smaller fund managers had actually written it up in their letter. So I read a lot of like other investors' letters, and I don't specifically remember. A lot. I mean, I'm kind of going through them just to put the stuff in the back of my head, because then 3 months later I come across this 8K that said, I think I know that name. There's something about that name. And it was because I read it, 3 months earlier in someone's letter, and it seemed interesting, but not interesting enough to dig into at the time. And so, I think there's something called a brain worm. You have to be very careful about the information that kind of worms itself into your brain. So you have to curate your information sources, and don't get distracted by kind of junk information. And I think that's kind of part of it. And in this specific case, it led to an investment in this company that I think ultimately, I'm still building the position and it's still working its way out, but I think ultimately it could be sold for 2 or 3 times of what it's currently trading at.
How much do you spend time reading letters, other investors' letters?
I'll read through most. I'll probably read 100 letters every quarter or so. I just kind of scroll through them. We're not reading it like every. You're just kind of scrolling through. And a lot of these people, you've become friends through the years. If there's something that catches your eye, you can give them a ring and stuff like that. So I think in that way, it is again, it's more of an idea generation and kind of curiosity thing. And also, I think it is valuable for kind of that brainworm idea to kind of keep yourself occupied with people that you think are interesting and that you respect their opinion.
I mean, something I found helpful too is I've got one particular manager that we bounce our ideas off each other. That's very important to have someone that, and you're asking them to be the devil's advocate, because all of us have biases, and someone who's not you probably knows where your weaknesses are, and they can point them out. And it's also, I think, important to get together or talk with groups of investors that have intelligently analyzed and reviewed companies. So if you can get like a group of 3 or 4 investors that may take a look at, I know, just give an example of what one of the in-practice interview you guys did, which was great, where it was a Carvana bull, a CarMax bull, and I was sort of like the traditional automotive bull. And you get some really interesting insights from that, because you see what the pluses and minuses of each of the models are. And I think from my perspective, that without that conversation, I wouldn't have been able to see that. I think that's part of the process is coming up with an ideas and just bouncing it off other people to see, okay, what's the positives and negatives, and try to seek out people that disagree with you and sort of see what their arguments are, and do they make sense, and is there data to support one point versus another?
How's that Carvana bull doing?
I don't know. But yeah, no, that's I think just the overall part of the process is basically trying to get confirming and disconfirming information, because over time theses are going to change, and intervening events may change your position or the way you look at companies over time. And so that's one way I think to fight bias is basically try to go out and seek disconfirming sort of information, because we all have these models in our head of saying, okay, this is the greatest investment in sliced bread, right? But you're just like, okay, find someone who doesn't think that and sort of think through their arguments and then say, okay, what makes sense from that perspective?
Yeah, and that's where you really have to be careful about some of these like kind of hedge fund hotel stocks. And it's really better to utilize your network to do that, to provide disconfirming information, not confirming. I agree.
Yeah.